morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, last week we looked at what would have taken place in 2020 now that it was done. And today we're going to look at what could happen in 2021 with respect to equity market performance. So let's get straight into it. And hold on one second. Great. All right. So just a brief recap. Historically, in 2020, markets would have been quite unfavorable at the local level, declining just around 9.9% in terms of the Trinidad and Tobago Composite Index. All-TNT and the All-TNT Index would have fared a little better, down just 5.2%, and the cross-listed, which includes Jamaican and Barbados-based stocks, would have fallen just around 18.4%. For 2021, just very quickly, we can see a couple economic drivers or market drivers influencing the fate of several stocks, or most stocks across the entire on the Trinidad and Tobago Stock Exchange. And primary among them, we could see that on a positive note, the resumption or gradual resumption of economic activity should bode well for stock markets and stock market performance. However, there is the issue of prolonged impact of the coronavirus or COVID-19, and there would have inevitably been some permanent damage done to the economic fabric and landscape of Trinidad and Tobago. So again, that's one significant unknown and possibly a negative driver for market performance. Overall, we also see as a theme for 2021 the higher cost of living as the country comes to grips and gets more familiar with and accustomed to factors such as potentially higher power rates, water rates, which are looming as mentioned in the budget, the fiscal 2021 budget. The fuel market liberalization would also play a role in terms of disposable income for consumers and investors alike and affect sentiment overall. That could increase the cost of living as well. And the continuing challenges related to the Forex markets and Forex availability could lead to higher implied pricing by many providers or distributors. And that, of course, could also increase the cost of living across Trinidad and Tobago. And that would certainly be a negative driver, in our view, for markets in 2021. We think that the energy price recovery will be quite a positive one. And we see this morning oil prices hovering at just over $51 per barrel, US $51 per barrel in the case of WTI. And in the case of Brent crude oil prices, they are over $55 per barrel. So certainly good news there in terms of pricing of energy commodities. Natural gas is also hovering around the US 270 per MMBTU handle. However, on the production side of things, well, that's a less favorable story, at least in the short term. For Trinidad and Tobago, we see that yet another plant has opted to idle, and there has been associated unemployment with that, or is going to be associated unemployment with that, as well as the spin-off effect for fence line communities, as well as the foreign exchange implications for the country. So overall, we think, in the view of Bourse, that is, that for 2021, the All-TNT index is going to advance just around 2%, with a margin of error of between minus 2 to 6%, so of a 4% range in either direction. And that's going to be driven by the All-TNT performance, which we expect to advance just around 3%, again with a wider range of expectations of -1 to +7%. And the cross-listed index is going to stay fairly stable, just advancing around 1%, again with that margin of error being +5 to -3%. When we take a closer look at the sector performance, well, it gets a little bit trickier here. Banking stocks we expect to advance just around 2%, with the best performing stock in our view advancing around 6% and the worst performing going down 11%. Conglomerates, which include Massey, Answer McCall, and Grace Kennedy, we expect to advance just on average around 2%. The best performing stock in this sector we expect to advance 3%, and the worst performing to decline just around 3%. Non-banking finance sector, in our view, is going to be the best performing sector for 2021, advancing on average just around 10%, with the best performing stock going to advance around 15%, and the worst performing in relative terms advancing just around 6%. And the non-banking finance sector includes stocks such as Guardian Holdings Limited, GMMB Group Limited, as well as NEL and Answer Merchant Bank, of course. And the manufacturing and trading segments we expect to decline just on average around 3%. Again, a very wide performance range, with the best performing stock advancing 8% and the worst performing just down around 8%. Internationally, very quickly, positive drivers include the distribution of the COVID-19 vaccine or vaccines, the resumption of economic activity, continued fiscal and monetary stimulus, all being positive drivers. However, the new strains of coronavirus and rapidly increasing cases could be a negative driver, as well as the prolonged impact of COVID-19, and the familiar term for most of us who follow investment markets could be a double dip recession. We wait to see if that will occur, but more positive drivers than negative at this point in time. When we take a look at what the experts outside are saying, with over 30 forecasts provided, the median estimate is just for an S&P level of 3,870, which is a 3% roughly advance from the start of or the end of the 2020 closing prices. But that range is quite wide, with a plus 20 and a minus 20 performance range given by different analysts. So clearly there is some significant level of uncertainty associated with investing internationally as well. So that's it for this week's edition. For more information, you can give us a call at 2-BORSE or 226-8773, email us at invest@boursefinancial.com, or check out our website at bourseinvestment.com, where all of our research is absolutely free. And of course, you can catch us in today's business section of the Trinidad and Tobago Guardian. Have yourselves a wonderful investing week. This has been the Bourse Report.